Welcome back to the Business Ramble. In this episode, Amber and I are diving into one of the biggest disconnects we saw last year. Funders saying they don't have enough viable companies to invest in, while founders are struggling to raise capital. So, is the old system still working? Or is it time to rethink how we support and fund innovation? If you're a founder, investor, or part of the startup ecosystem, this conversation's for you. Let's dive in. Good morning, Amber.
Good morning. We're here. We did it.
We did.
We made it. We made it.
So today, I wanted to talk about a conversation that we have managed to have 4 different times this week, because I actually had a conversation about it with somebody else too.
Oh,
We
nice.
weren't even around. And it's this difference between innovating and updating. So we were strategic planning this week. This is our first week back in the office. Woohoo, we made it through the holidays. It's 2025, y'all, and we're here. And we were discussing our successes and what really worked last year, as well as looking at what are the trends and themes and lessons to take from the year.
Yeah.
And the big one that kept coming up was this need for innovation around innovation support systems. And this comes in a lot of different ways. So you've got incubators, you have accelerators, there's online courses, there's mentors, but also the capital. The funding is an innovation support system. So that's VCs, that's angel investors, it's family offices if they're choosing to invest in innovation. And one of the things that we're seeing is a lot of them are updating, and that they're doing now virtual, and they have maybe these self-led options, and they're a little more flexible, some with timing, but we're not seeing actual innovation. And so I thought we would start with what makes something an innovation versus an update.
Mm-hmm.
Do you have I know I have my own take on it, but what's your take on that?
Well, I think before even that, one of the things that was interesting for that exercise we did was, and just for other people that might want to do it, because it was really helpful, was we looked at what were our top 3 successes from the year. And then we dug in to determine what made them successful per our definition of success, right? Obviously, they paid us. So that was exciting. The entrepreneur would love to get paid for their work that they do. But we've talked about this before. We get asked the question all the time, why does what we do work so well? This isn't our formal education. We have learned the sales, the marketing, the go-to-market strategy, the branding, all of that, boots on the ground, from the School of Hard Knocks. And we see these patterns, and we began to see this pattern of, hey, these ecosystems are doing really good work, right? We got to work with some incredible ecosystems this year that are doing really good work and focused on specific areas like climate change and resiliency, technology, ag tech, med tech. We've gotten to work with some really incredible organizations that do a phenomenal job of supporting founders in where they are. And we've also noticed when we work with founders, one of the big things is teaching them how to tell their story and how to talk about what they do effectively so it catches people's attention. But the other thing that we heard from founders was they were getting meetings with VCs, but the VCs were just checking a box. They were maybe sending junior associates because they just had a quota to fill. Or they really had no intention of investing, but it was a pitch event, or it was some sort of event that, again, they had to tick a box. And so for the founders, their frustration was it felt like a big waste of time, right? I've worked really hard on not only my company, but my pitch deck, telling my story. I have taken time out of working in my business to do this program, but we continue to see gaps around those structures that support innovation and how money is being deployed. This was part of why we launched our company, was post-COVID, VCs and investors were investing totally different. And during COVID, we saw an uptick in money going to women, female founders, and founders of color, but that's since dropped over the past year or two again. And so something's not happening where these support systems are able to also innovate and grow. It's still stuck in an old system. And that makes sense, right? It's a high risk. Especially if you're early stage, you really may lose your investment. But are there ways that we can teach or begin to think creatively around how we're deploying capital and even the systems and ecosystems outside of funding that work with founders? Are there new ways for us to meet their needs that aren't just we add a new class or we add a virtual component? There really is a deep sense of, hey, this isn't serving this population anymore. This isn't serving founders in the ways that it did. And that was good work that they did, right? Y Combinator wrote the book on how to do an accelerator and get to funding. There was some incredible innovation, but I think there's in this new season where it's like, okay, what's the next iteration? And not just an update of like, hey, let's tweak our language a little bit here, or let's add this class, or let's, lengthen or shorten the accelerator program length, or those are updates and those are things that need to happen.
But innovation in of itself is, in my opinion, it results in a cultural shift. So for example, let's remove the support system side and put it just to founders. Something is disruptive. The thing that makes it disruptive is, yes, it's usually very successful, but really what it does is there is a massive behavioral shift that happens in the people who are interacting with this product. So let's take Uber, for example. Before Uber, the norm was you call a taxi company. Taxi companies had employed taxi drivers that were there and ready. They had their time. They went to the taxi place, used the car that the taxi wanted to use. You called, you picked it up, you waited. That was kind of how it worked. Or you're on the street and you're like, here, let me put my hand out, grab a taxi, go to and from. Uber came and said, hey, actually, anyone can drive if they pass these things, and you can use your own car even. And that way, there's no restrictions, because the taxi company is like, we won't go that far out. That's too far. That's too expensive. It put the onus and the control of taking a taxi, using that mode of transportation back on the rider. And then you had this huge cultural shift, right? What was the thing? Your branding worked when they used your brand name as a verb. Now people say, can we Uber or can we Lyft, right? They don't say, let me call a taxi or let me call a ride share. Nobody really says, let me call a ride share, because there was a resulting cultural shift. Now there's an expectation. So you end up with this disruption. Airbnb is another one. It's a disruptor because it changed the culture around how people travel and how they book accommodations and how they view stays and how people view even their property in real estate. And multiple streams of income with Uber and Lyft and DoorDash and all of those things. It's a cultural shift on the people that are operating it, because they're like, oh, I can have a job and have multiple streams of income outside of this. And then it's a shift on the people who are using it, because there's an expectation, there's a change. Now what we want looks a little bit differently. I don't want to have all my meals cooked for me from a hotel. I want to have a kitchen so I can do it myself. So that is true cultural shift and change. And that's the thing that we are not seeing. We're seeing updates, like you said. And again, we're going to reiterate this so nobody misunderstands. Founders do need to be able to tell their story really well. As people who are funded by helping people tell their story, we will tell you how important it is. Founders tell their story and they update their pitch deck. And we do need to see sound financials and operations and all of those pieces. Your infrastructure has to be strong. But you said this the other day, and I wrote it down because I absolutely loved it. What we want to see now is VCs, instead of investing in 10 companies and expecting 9 to fail, and just one to carry the rest. We want VCs to invest in 5 companies and expect 4 to succeed. So we're flipping the data. And I love that. And it's nuanced in the language, because if we expect failure, we tend to be 1 foot out the door. If we expect success, there's a whole lot more that we're going to put in.
Right. It's this both and. The product market fit has to be there. And you have to be able to have the skill set to get it there, right? I mean, we coach people on how to do sales. What is their marketing strategy? Just had a conversation with a founder yesterday, and I said, what we need to determine is how much it's going to cost you to make $500,000 next year. What is the investment because she said, I need to go for funding, and she has a viable business. They were a 6-figure business. She just wants to scale it now. She's taking it to the next level, and determining what type of funding is going to require us to understand how much is it going to cost for you to grow your business, and where does that investment money go? On the founder side, we have to be able to communicate, hey, I need $5 million because this is my marketing strategy. This is how many sales reps I need. This is the infrastructure I need. I need to invest in new equipment, whatever it might be, not just if we could just get $5 million and we'll figure it out as we go. So there is a responsibility on the founder side. But we're seeing the other shift and I think when you are talking about like there's a cultural shift, I am hopeful and I have a hunch that this cultural shift is moving towards genuinely understanding and beginning to invest in Black female founders, in brown female founders, in Indigenous founders, in women. Because what we also know statistically is they do way better with funding. They know how to stretch a dollar further. Yep. They understand the components of where and how it needs to go, because they've had to be more organized and do better to get the same amount or even close to the same amount of attention as their white male counterparts or male counterparts. I think we're seeing culturally in general these shifts of just going, we've got to find real solutions. We're recording this right now while the fires in LA are happening.
I've said this to you. We're at a reckoning in the world. People are having to live through the consequences of our actions. And innovation, I think, for a lot of time, we go through waves, and I'm not going to do anyone the discredit of trying to quote any historical information I'm totally going to get wrong in dates and all of those things. But there are times when innovation is a luxury, and there are times when innovation is a need. And we are in a time of need.
Yeah.
And you said this the other day. What'd you say? You said the VCs are approaching, and funding sources are approaching the current system in an old way that no longer serves us and expecting the same output.
Yes.
That, I think, is the core of it, right?
Yeah. I mean, here's the thing, let's take the fires in LA as an example. There's been plenty of discourse around, well, they should have done this and they should have done that. And it's like, listen, yeah. I mean, we know across the board, especially in our work with resiliency companies, that the biggest challenge is getting municipalities or state governments to adopt things that don't provide an immediate return. Like when we look at parametric insurance or early detection warning systems or those kind of things, they cost money on the front end that doesn't provide an immediate result because they are in place for protection for down the road. And it is getting people to adopt a mindset that says, look, this isn't happening right now, but the reality is, especially if we're talking about climate, every single part of the globe is going to be impacted by a once in 100 year event way sooner than 100 years. They're happening closer and closer together, and the devastation is more and more and more and more. And so this cultural shift, I think we're seeing is saying, hey, we've got to start investing truly in the things that are going to protect us in the future and begin acknowledging that we have to have some sort of delayed gratification, because we're all always really glad insurance is there when you need it, right? And now we're innovating around how do we bring better products so that it's not just a cash cow for an insurance company and then they pull out when it becomes too high risk or whatever, so how do we genuinely restore communities and provide good life for people? I really think our current model is still stuck, where you're just dumping money into these ideas that, yes, I mean, Google, Meta, all of of course they were game changers. Of course they were. And AI, yes, of course it's a game changer. But we just had this conversation yesterday at lunch. It's like, we're looking at these tech companies and it's like, is it just that I can Google something faster? Is it that I can organize my CRM better? And I'm not saying that those aren't good. Again, we need to and continue to increase the capabilities and efficiencies of the tools we use.
Right.
But when we think about investing in really strong innovation, you and I tend to look at, where's the water purification system? How do we do better healthcare? How do we do real things that will use technology and AI, but the solution is something that benefits and betters somebody's life in their day-to-day life. And but that Silicon Valley model is that we're going to dump a bunch of money in, and we know that most of these are going to fail, but one of them is going to become that unicorn, and it's going to make up for everything else.
The reason why it's not working now is because what did the world look like when the Silicon Valley boom happened? It looked very different. People lived and breathed their 9 to 5 for years, decades even. You were applauded for being at a company for 20 years. You commuted, you went into work. You had people spending all of their time doing paperwork and filling out things. And there was so much time it took to do a lot of tasks. Let's skip forward to today, post 2020. It was, you have to update, and this is not innovate. You have to update to digital or you're gone. And a lot of them left. You have to update to having people work remotely or you're left behind. You have to update to automating your processes, to making sure that you're efficient or you're gone. And the Silicon Valley, a lot of what came out of that was things that allowed that to happen. And it was vital. And it was a huge cultural shift. But now our workforce does not want to be tied to a 9 to 5 job.
Right.
We're seeing more and more people are leaving. I mean, hey, look at us. We are seeing this change in values. I mean, post-COVID, what people now valued and put more time and willingness into, the healthcare has always been big, but the self-care side has significantly increased, because when we were stuck at home, we realized, whoa, it was a huge boom that everyone needed to go, maybe that wasn't super healthy, and we had just kept doing it.
Right. Well, and historically, when people were working for decades at the same job, the thought process was, you work here, you retire, and you have another 20 years to go do all the fun things that you want to do.
Because they could afford to support themselves.
You could afford to do that. That's not financially an option now. And people are going, I don't want to wait to start my life. I want to live my life now when I'm young and I have energy. And, people are having less kids or no kids, or not me. I had too many, but it's like, but people they're understanding. They're saying, no, I want to enjoy my life and the quality of my life to the best of my ability now. So my standard and what I am saying my quality of life is, and the things I want to invest my time and energy into, are not a 9 to 5 where my employer doesn't care about me. I am completely expendable. And again, that's a mindset and a framework that is requiring companies to now go, okay, the solutions that people need now or want are about, make my quality of life better.
Yes.
How do I live my life with my friends and my family in a way that I can enjoy it and I'm not exhausted and burnt out all the time?
And we see that value shift happening through how people are purchasing. So I dove into this when I had the agency. I ran a couple of workshops and classes on the millennial buyer, because at that time, the millennials they were the largest purchasing group, and I was working with a lot of real estate agents. And that was the time all of the millennials were buying houses. But how did we get them to buy from us? And it used to be, well, we just need to be this big established company. But then it became much more about who you were as a person. It was a trust but verify. Referrals were not enough. They needed to see you've got copious reviews on Google, and they need to look at what houses are you selling. Does that look like the kind of house I want to buy? There was a lot of data behind the purchasing and how it very much shifted. And I mean, we see it now. People do not want to buy from companies that are supporting genocide.
Right.
Imagine that. Imagine that. Right? With this innovation that came out of, .com boom and Silicon Valley and all of those things, and now so much of our life is digital, it's also all out there. And so people are digging and they care. And now we're raising kids by these people who care, who have the audacity to care even further. It's my favorite thing about Gen Zers is they demand change. They're like, no, I have nothing to lose. I don't really care. I won't do it. I won't do it. And that shift is huge. And that's what we need to see. And I think this is why I see it's starting to happen, right? This shift to impact first investing. And
Yep.
I really feel that, and I'm not saying I have all the answers, but I do feel one of the answers to how we need to innovate from a funding perspective is, instead of funding and hoping they then go do their pilot or they then go do their launch or do whatever else, we fund a particular aspect. We fund a pilot, we fund a launch, and then we measure it along the way. And we say, okay, you're doing this. We are funding the actual change, because we're not waiting. Because a lot of times you fund a company, it takes them still 5 years to get anywhere where they're really impacting change. So like, let's flip the timeline around. Let's say, okay, we have this need. This reminds me of, so one of the companies that we're contracted through is Rise Resilience. It's a nonprofit. They run these challenges. And the one that we did, it was the Riverine Challenge. And it was for Southwestern Virginia. And they needed solutions around all of the massive flooding that was happening. And if you're not familiar with this, I'm sure you're familiar with Helene and how it completely took out Asheville, North Carolina. Well, it wasn't just North Carolina. It's also Southwestern Virginia. And it's been happening.
Yes.
And they get these massive flash flood, devastating events. And we're like, all right, we need solutions to this. We're going to fund you putting a pilot in place for this before we have to convince the city to buy it. We're going to let them basically try it out for free, start getting positive impacts. Then, for me, the next step is have someone be measuring this the whole time, seeing what could come out of it. Then you take it to a funding vehicle that goes for, okay, let's go for further equity, or let's now take this to a commercialization level because we have proven our concept.
Yes. Okay. So one question and then a thought on that. So interestingly enough, before Christmas, I was talking to somebody and he was saying how public funding, because the Rise Resilience will get, I think they get grants and, government funding. And one of the things that we encourage a lot of our founders to do is find grant funding, like find funding sources that you don't have to pay back, especially in this early phase, right? He was saying that a lot of the funding that goes to, founders or different, even if it's like government contracts or, different things like that, that people aren't necessarily hitting the marks, right? I said, well, I think because we need to remember the purpose of each of these types of funding, right? Different types of funding serve different purposes. So, for example, if you are a small business and you do have revenue and you are able to prove, a length of revenue, you can go get a small business loan, which is a great funding source. It is a smaller interest rate. It is a longer payoff amount. It is something that allows you to grow your business, right? Especially if you're a main street or a brick and mortar. Grant funding goes to specific things that will provide and give access to capital for people who don't necessarily have access to it in other ways. A friends and family round. One of the things our especially Black female founders will tell us is that their community doesn't necessarily have the financial ability to do our friends and family round. You and I talk about this all the time. The reason we have been able to run so hard after our business is because we have had the privilege,
Absolutely.
the absolute privilege of having friends and family that are financially able to support us as we run after this.
Yes.
That is not something that is accessible to everyone. So public funding should extend the reach of access for testing these new types of innovation, right? So better grant funding, because this is an economic development requirement, is we need new solutions or better solutions. So if you are a decision maker in a municipality or a state budget, like when you are looking at economic development, you should be looking at how do we increase access, because the people in your community are the best people to solve the problems within your community. They understand how it works the best. A solution for Baltimore City is probably not going to work in rural Virginia. So public funding should be a broader funding source to be able to extend opportunity. And then when we look at private funding, we should be able to take some of those things like these pilots. Okay, that worked. Okay, we tested it. This is going well. All right, now let's infuse some additional capital that will take it to the next level. But we've proven that's not necessarily how it works, but I think that could be a really cool and innovative way to think about it as we think about economic development. We just talked about this. What are marquee projects we can bring to areas that infuse more capital into the community for them to reinvest into their communities? And we're seeing a few funds like this impact investing. We're seeing a shift begin in funds where they go, okay, we are going to spend a longer period of time working with founders and companies. And I think that's the other shift that probably has to happen on the investment side, is we are willing, instead of pushing and saying, go, 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 because then you rush the innovation out of the idea or the product or solution.
And in order to do that, they're again using an old model. So they're saying, you were so creative and innovative, now stop. What? That's not how I got here. Now you're asking me to shift my perspective and how I approach things.
Yeah. But instead of that, let's say, and we say this all the time, little and often over time is where you see the biggest results. And the best, most effective accelerator programs and funding vehicles that we see take less founders and sit with them and work with them for 6 months to a year in a very intentional way, where they teach them the skill set on how to build their business and infrastructure around their innovation. Those companies last longer and make a bigger impact because they have taken the time on the front end to build the structure and really determine what the market needs and how to craft their innovation and solution to the real needs of a community or a market or whatever it might be. And the old model is saying, we're just going to dump a bunch of cash in. And I know somebody's going to get mad that I'm saying this. It's how it's been done. You're dumping a bunch of cash. You're throwing spaghetti at a wall, hoping something sticks. And when it doesn't stick, you blame the founder without ever having given them the tools, the resources, and the support that they really needed over the long haul.
And to be clear, we're not talking about serial entrepreneurs here. Because what we're seeing is a lot of true innovation is not coming from serial entrepreneurs. There may be one part of the team, but the solution that came up is not coming up because they were business owners before and they have a lot of business acumen. It came up because they were probably living in the problem that they were trying to solve. They're innovators. They're not CEOs. Now, we can train them to be CEOs if it's a fit, or we can match them with somebody who is a CEO who's a really good fit. But again, it's just that takes time. That takes recognition. This hands-off approach. Here's money. Let me walk away. Founders don't want it. That's what we keep hearing. They don't want it. They want direction. They want help. Getting money makes them so nervous. They're very excited. The smart ones. They're very excited, but then they're like, oh gosh, oh gosh, oh gosh, now it's on. But the thing is, and I think about this, like, let's say somebody who's trying to bring a product to market, right? If they have been able to make revenue thus far, it's amazing. It's awesome. It's not done cleanly. It's not done efficiently. It has been figured out along the way because that is what they've had to do. You giving them money does not change that.
Right. Magically make this more efficient. Yeah.
And so what I keep hearing here on the investing side, especially from family offices, well, there aren't enough projects to invest in.
Yes, we hear that all the time.
And then we hear from the founder side that they can't get any funding.
They're like, who do I talk to? Yeah.
I think it's just because they're both expecting different things. We're in this weird growth time with innovation, and not everybody's on the same page, which is fine because you end up, I always think of so many things as people say opposite sides of the coin, but I say opposite sides of the tunnel because it's always a journey, right? We're in the middle, one starting on one side, one starting on the other. And that's all they can really see as they're trying to walk along. Once they kind of meet the middle, then they can start seeing the other sides and like, oh, but it's the same journey. And they're just not recognizing that, hey, we are in the same tunnel. We have to value our diverse perspectives in this, but they both have to be willing to make the walk. You can't say, okay, you're over there on the other side of the tunnel. I'm really taking this metaphor far. I've put the money bags and things here on this end. Make it all the way through. Also, I can see from my side that there's some alligators there and there might be a booby trap on that way and whatever else. You make a throw, then guess what? You earned it. And you're like, bro, it's not Mario. You could just help me. And then your money would go further.
Right. Well, and here's the thing. That's why we started our company.
Yeah.
We saw that gap. We were like, there is this big gap. And it's like founders and investors they're talking at each other, talking right past each other.
Much as founders don't have a whole lot of time, neither do the investors. They're busy. And a lot of times they're not just full-time investors. You have a full-time fund manager. You're not really just out there handing out money. There's so much to do.
Right.
So you bring in people like us or some of the other people we know that go there and we nurture the potential. Okay, we unlock it early on so it doesn't get stuck in these pitfalls. And that's the way, is maybe we invest a little bit less. Some of our money is going to paying someone to support you. And this is why I like these pilot projects, because what a way to de-risk your investment is to say, I'm just going to put a little bit here, give you someone to help with this. It's only this one project. So we're not talking a ton of money, just this one project. And we're going to see exactly what it does. And we're not just looking at the impact and the market threshold and palatability and all of those things, which are important factors. We're also looking at the growth and potential of the team, because you and I both know those qualitative things are a lot of times what makes or break a company. It's a lot less about their idea. If their idea doesn't work, they're not even going to get up there to begin with. We know that, unless somebody with deep pockets and not a lot of sense is just thrown in at them, which has happened. But really, it's the team dynamics. It's the ability of the leadership to learn, adapt, grow, build efficiently. And if you see a team actually have to execute something, that's why they do all of these team building exercises outside in the wilderness things, because if we see them have to execute, it becomes a lot clearer
Yes.
where we need to help them and if it's going to work.
Yep.
Before that, I mean, it's hypotheticals. And so you do have a riskier investment because you don't actually know.
Right. Right. I want to make sure we're clear too. Like, we understand on the investment side, that is your money. That's your money. That's a risk. I mean, to look at something that is brand new into the market and going, but could you for a minute be creative and unlock your imagination for a few minutes and go, okay, what are the potential outcomes and benefits of that? What are the intended consequences? What are the unintended consequences? We do need to look at the risk, but I mean, you and I have had several companies come across our desk and we're like, dude, this is a thing. And we can't get anybody to bite on it. And we're like, how do you not see it? We get it. Like, yes, it's a risk, but the founder has done enough good work around de-risking it to the best of their ability outside of building it or piloting it. And they need access to capital. And I know there are incredible angel investors and VCs out there that are willing to take these risks, but we see more often than not, founders, they're spending all of their time just like trying to find money to do this thing. And it's disheartening and it's frustrating. And we're looking at all of this innovation. It like sits in a closet over here. We're like, where was that? Like, that could be a thing.
And this is not to say that we think all businesses need to succeed and there should be more, because know that they're not all meant to survive and not everything is viable. Totally true. We are more than willing to call a baby ugly and have done so on occasion, much to other people's hurt feelings. But at the same time, here's my theory on this and why we're in this gridlock, particularly right now. Everything is not just about what you're doing. It's about when you're doing it, right? That's what is a why you, why now, why this. Okay, the now, the need for innovation is so great in the areas that are so quote unquote dangerous. They are scary. They are life-shifting needs, right? We have systems that have rooted in place for hundreds of years that are now broken because of what we've done to them. Think farming and agriculture. Think energy, fossil fuels, resources, all of those things. And the need is so great. But in order to make an impact in those particular sectors where people are really looking, and the need is there, it takes a lot, is so much, because we have so much knowledge, because we have exhausted so many things already. We have all of this time of innovation behind us. At the same time, those systems are making us money. They're broken and they're making everybody sick, but they're making us a lot of money.
Somebody money.
Yeah. And the type of innovation that we need is very, very high risk. It is we are going to push science to its brink and hope this works. If it works, we're probably looking at the highest rewards ever. If it doesn't, it's a lot of money down the drain. And I'm putting closer on that because not really, because we've learned something. But again, that's not how money works. People aren't like, well, at least I learned something. You're like, those numbers are down. I love that, which totally fair. But I think that's why we're in this gridlock. We're in this place where there's such sensitive topics, yet the need is so high. People are nervous.
Yeah.
And it's understandable. I get it. Somebody's got to be willing to do it. And I think that's the impasse we're at. That's my theory as to why, one of the many reasons why we're gridlocked right now is because we are running out of the ability to keep burning coal. And we are running out of the ability to live through all of these devastating fires and tornado increases and floods and all of those things. And they matter and they impact so much. And included in that is a large economic supply chain.
Right. Well, and like the model's got to change, right? Like in terms of just even capitalism as a whole. You reposted something the other day that Canva, Spanx, and there was one other company They're all female founder. They're all female led, billion-dollar companies, like, right? And they all have decided, like, we've got a year's runway in the bank just sitting there in case something happens. We make sure every single one of our employees has X amount salary so that they can take care of themselves. Because again, the model in business has been make sure the stakeholder makes the most money. There was a huge shift back in the 80s and 90s where it was companies typically were like, how do we make sure the customer benefits the best? I mean, we see this with like our appliances and things that we buy. Like, they used to be made to last for decades. And then companies realized, well, then they're not going to buy as many. So they made them less durable. So now the benefit isn't to the customer, it's to the shareholder. And I think some of that too is we're seeing this value shift in our culture, is that's got to shift. Like, we're done putting more money in millionaires' pockets while we're sitting here going, hey, we've got this really great solution that would actually really help people rebound faster from a natural disaster, or put protections in place so that we can elevate buildings or things so that things don't flood. The destruction isn't as massive, or we create different ways for people to have access to healthcare, or whatever it might be. The tide it's beginning to shift. And like you said earlier, it's a reckoning, right? Like, I think the next 5 to 10 years, it is going to be a massive cultural shift, period. And so which investors and funding sources are going to be willing, the ones that are going to come out on the back end, on the right side of history, having invested in the things that are actually going to change the world, are the ones that are willing to take the risk now and say, hey, I am going to take a risk and invest in something and require that this innovation get a seat at the table, because it is necessary for the change that our world is desperate for. I mean, because at the end of the day, if we don't figure this stuff out, I mean, people are dying. This isn't people can't afford red bottom shoes. This is people are dying. People have such a severe loss of quality of life. And I am hoping and believing, and we're seeing hints of a value shift of, we want to put the opportunity back into the hands of the people that can genuinely benefit from it. And that's not saying that the shareholders aren't going to make money.
No, they actually, every time they still do.
But it's a value shift. And the funds and the organizations that we work with that do this impact-led investing, I mean, they're some of the best people we've ever met. They are spending a lot of time and energy in smaller cohorts with more focused energy. I mean, there is not a fast solution to good innovation.
You know what they're not? Scarce.
Yes.
And I think that's one of those things is, I mean, the last, let's say 32 years, as long as I've been alive, there's been so many things that have happened that have made many people afraid of losing their money. So you have this scarcity mindset with people who have 7 figures in their bank account. And then you have people who are like, I'm choosing not to be. It's scary not to be scarce, but it's a mindset shift.
Yep.
And right now, all money has an endpoint. And you can't tell me that it doesn't, because like, oh no, because people who have lots of money but they're not spending enough of their own money for it to create a cyclical effect. And if they could spend a little bit more differently, it would create the cyclical effect. But it's hard. It is hard to go without, have what you need taken from you multiple times in your life and not have that affect you. And we're having that on a societal level. And so I can empathize and I can understand. Not an excuse. And I think at the end of the day, like, that is one of those things where that mindset shift has to start happening. And I kept thinking, when you were talking, I keep thinking of, imagine trying to like convince your dad, not your dad, because your dad is very health conscious, but like somebody's other, like, they've got
Yeah.
salt of the earth. Like, hey, Dad, I really need to start taking this vitamin.
Mm-hmm.
And he's like, I don't need that. I didn't need it before. Don't need it now. Curmudgeonly, just the stereotypical image of that salt of the earth dad of being like, this new fangled science health stuff. And now you have people living longer because they're investing in themselves up front. That's what we're asking of our municipalities. That's what we're asking of these larger corporate systems is, hey, the only way it's going to happen is if you keep investing in yourself. Because if not, you're going to get hurt or you're going to burn out. Keep it on the health metaphor, like real quick. And that's going to be it's a large fall, real ouchy.
Well, and we tell founders all the time, let's take a little bit more time on the front end and build a strong infrastructure and really test this out and understand, because that will expedite your growth on the back end, right? I mean, it's the same principles. Business principles are life principles. I'm not going to go exercise today and see the immediate result. That's a real big bummer, and it really makes me angry every time. But that's the reality. Little and often over time are where we see the results. And if we can begin to understand investing in good, necessary solutions that may not provide an immediate result right now, but are the things that we do to care for our communities and our society over the long term, everybody benefits. And we've said this multiple times too with some projects we're working on, because in our community, it's been like, well, people wanted that for 20 years. Why hasn't it happened? There's been a lack of leadership of people saying, hey, hold on, stop for a minute. We've got to figure this out. We have got to figure out how to do this, because, and not to be fear mongering of like, and if we don't, like, everything, the world's going to blow up. But we need to take into consideration the fact that if we don't invest in real solutions and funnel funding into the hands and the businesses of the people that do it really well and have figured out that solution and strengthen their ability to lead a company. And here's the other thing, because you said this earlier about teaching people how to be CEOs. The current model for a CEO is a white man. That is one way of leading a business. And we see it again in that post from LinkedIn. Spanx, Canva, these other female-led, they are doing it differently and they are so successful. They're not perfect, but they are highly successful.
Because they're innovative.
They're innovative, and they chose to run their companies in a way that was potentially counterintuitive to what the standard model said to be done. I mean, we've done this even in the way that we now block off vacation time. We are planning for 5 or 10 years down the road in terms of what we want our team to look like and the ability for them to have rest and vacation. And what do we want that work-life balance to be? Like, just because there is one model of doing something does not mean that is the right or best way to do that. And we need to be willing to allow people to innovate how they run their businesses. Yes, there are best practices. We're not saying throw the baby out with the bathwater. What we are saying is it's okay to innovate, and it is necessary to innovate, because the current model that we have used for a century is not working anymore. It's only working for a small percentage of people, and that is not sustainable. We have to create better sustainable models. And both on the founder side, founders, if I can encourage you, take the time and energy. I know that you are feeling the pressure to make money. Build the infrastructure of your business. Build the infrastructure of your business around your innovation. Get help on how to communicate what you do, not how it works, what you do. And then for VCs, we are asking you to maybe begin to be more creative about who and how you invest. Maybe invest in less, but spend more time with them. Leverage your networks. Teach them some of the skill sets you have. I don't know what necessarily all that looks like, and we're continuing to dream about that, but there has to be some give and take on both sides. And you can always hire us too. We're here. We're available.
Well, that was great. And I'm excited to see what we end up diving into next week.
Mm-hmm.
And as always, please like, subscribe, leave a review wherever you found us. We appreciate it, and stay innovative.